Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, December the 8th. The year's 2022. Let's talk trading. Trading routine, part 5. These videos are for educational purposes only. Your results may differ from mine. Okay, you're probably wondering, what more can we talk about routine? Well, part of the routine is really working on the brain management, because we're talking about consistency. We're talking about discipline. Well, one of the things that we do to ourselves is we sometimes have regrets, and we have regrets based on failures of the past. And usually it's an inaction. You failed to enter the trade, or you failed to exit the trade when you should have, and you have a regret. Or sometimes you failed to enter the trade. And the reason you may have failed to enter the trade is because, once again, your mind's playing tricks. Oh, every time I enter, a price goes against me. And you just put yourself in a really bad state of mind, and it's almost paralyzing. And so you've got to overcome that. And the way to overcome it is sometimes you just have to take a break. If you've had a bad few trades in a session, or a few bad sessions in a week, or a few bad weeks in a month, sometimes you just might need to take a break. I mean, I'm at this computer 5-6 days a week. I usually don't trade on Sundays, but I still make the video. And I rarely miss a day, but sometimes I might be sitting here, but I might not even take a trade all day. And the question is, could you do that? Could you actually sit down at a trading session, look at the screen all day long, and just not click? Now, if the reason you're not clicking is because you're afraid, that's one thing. But if you're not clicking because you're saying, you know what, I need a break, I need to not enter the trade and get frustrated, maybe I just need to watch. I just need to watch, and maybe just by watching, I'll say, oh, I would have entered there, and oh yeah, it would have won against me, and oh, I would have entered there, and yep, that one would have won against me too. And then maybe you might see a pattern. Because when you're actually in the trade playing for money, you're wrapped up. You know it, because I know I get wrapped up when I'm trading sometimes. And it doesn't matter, how large or how small, usually. You just get wrapped up in that trade, and you start to wonder, and then you start to think. But really, we've mentioned this, I don't know if we've talked about it this year, but I know we've talked about it, somewhere in one or two of these videos. When you're at your trading screen, your trading platform, your computer, your phone, your tablet, doesn't matter. That's not the time to think. That's the time to anticipate and react. The market moves too fast, you can't think. And if you are thinking and making those decisions, you're going to fatigue your brain. And that's something I've been doing this week. It's a little change. After a couple of hours, I say, you know what? I'm just going to have to sit out the next 30 minutes or whatever, because I don't want to fatigue. I don't want to make mistakes. I don't want to get caught up. Because it's so easy to look at a chart, do the old Harry hindsight. Yeah, I would have entered here and I would have got out there, blah, 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 right? It's something else when you're in the moment and there's things you forget to look at. It's like this morning, Walmart's still a little under the weather, so that's why he's not on the video. I think I went short and he went long. And it's just like, oh, why did I go short? I missed something. I didn't see that. There was that M5 was green, or whoops, I missed that. There's, so many pieces. On the other hand, you can really beat yourself up if, when you're doing the hindsight, you look for things that you normally don't look for. You say, oh, I should have. No, because if that's not part of your plan, if that's not part of your trade trigger, if that's not part of the method, you can't do that. And that's why I try to tell people, trade one method. because if you look at another method, you're going to get conflicting signals sometimes. I mean, Walmart and I pretty much trade the same thing, but there's so many times where he's one way and I'm the other, and we both wind up making money just because we have slightly different entry criteria, for direction bias. He might be using, say, the indicator 2, and I might be trading levels. Like if it breaks below this level, I want to go short. So, for example, just recently, on a trade, I took a trade short and it went against me. I think I was short around 22, was it 22.13? Yeah, I think it was 22.13, and then I got short at 22.23 and exited out because I just looked at it and said, you know what, this sucker's got to turn. It was in the upper wick zone, just like it's right now. It's just now exiting the upper wick zone. Where's the wick zone chart? It's one of these. Here we go. Right here on this particular broker, the upper wick zone's at 22.05. On the other broker that I used, it was 22.09. And so every time price was getting up here, I was just shorting. And sometimes it would go against me, but then I might add on, or I would just wait it out. Plus, it's it's really near that double O, and I'm waiting for it to cross below that double O again, because you can see here last hour it crossed above the 2200, or the double O as we like to call it. But the thing is, I'm talking about not having those regrets and not beating, myself up about what happened before, because I don't want to go into a tailspin. No, I'd much rather reset. So, right before I started this video, I was in a trade and I said, you know what? I was up 7 pips. And I was thinking about, should I leave it? Then I go, you know what? I'd much rather just exit out of the trade, take some pips. I think I took 4 pips because it reversed on me. Actually, it came down, hit that bottom and reversed. Then sit there and be worrying about the trade while I'm in the video, because right now I'd probably be down or something. So I'd be kicking myself. So, once again, you want to do things in the moment, and then when you look back, you have to remember what your decisions were and don't beat yourself up. The thing what you have to look at is, when you're going back and grading yourself, is, did I follow my method? Did I check all the boxes? Did I do what I was supposed to do at the time I was supposed to do it? Nothing more, nothing less. Because if you try to put something else on there, you're only going to mess yourself up, really. You're going to put yourself in a really bad headspace. Really bad headspace. Because we want to follow our routine. We want to have a set routine that we repeat day after day, as Walmart likes to say, wash, rinse, repeat. Because if you're doing something today and you're doing it a little bit different, the next day, and you're doing it a little bit different the next day, you're fiddling around. You're not really trading your plan. So, something as simple as the wick zone. Here, it's like, go with the candle color. I want to be short. You see here, up here, it was peaking. There was a few other things I looked at. So when price came all the way up here, it was about, I forget how many pips away, almost 30 pips away from the indicator 2 or EMA 5 right here on the multimeter. And I saw that because when I ran my statistics, it's like, for that thing to be 20 or more, it's only about 20% at a time. So when it gets way up, when it hit the 20, I just was waiting and waiting. And when it hit the 30, it's like, you know what? It's time to reverse this, because price will most likely revert to the mean. And sure enough, it did. And I got out of those trades with the profit. So, if you're wondering what that indicator is, it's a couple different ones. That's the multimeter indicator 2 here, and I'm using the EMA 5, which is indicator 2. And all indicator 2 does is tells you is price above or below the EMA 5. I mean, you could see it if you draw the squiggly line, but I like to have the dots instead of the squiggles. And this is something, like I said, way back in the stock trading days that we kind of imported over to FOREX. This is back, what, 2008-ish or something? Somewhere around there. So, but it's kind of tried and true. And like, Walmart likes to see two closed candles in a row and with aqua dots, and then you go long. And one thing we've noticed is it's either the second dot or the third dot, price really launches. It'll take a few pips. So like right here, you've got that aqua dot, so you want to wait for this candle to close and then the next candle to close, but you see it's already leaving the flip-flop box right here. And the flip-flop box is just simply when you have the candle colors flop. So we've got a black or bear candle, a white or bull candle, and Walmart likes to use the high and low of the flop candle, so flip to flop. But so you see here, we waited and it didn't close aqua, so it's still heading to the south side. And it's getting out of that area that I mentioned before, that 2209, which just happened to be the open on that other broker. That's the one I was using to go short. And you can see here at 2212 we had the highest open of the day. So anybody likes to trade the holo trades, you're up about 5 or 6 pips right now. And you see we're right there at the daily open. So once again, depending on your broker, you might have different opens, different high lows, but you have to trade what you see, not what somebody else is doing. And we just came out of that upper rat zone too. That was something else. And we went from the lower rat zone to the upper rat zone in 3 hours. So for you rats out there, let's see, that's buy zone. For you rats, you can see right here that 2210 was the last time to get on the bus, and now we're back to that 2200. So yeah, had I been able to trade, there's more pips to be had right there because I thought price was going to come back down to that 2200 area. So talking about routines, the rat is part of my routine. I like to look at it and say, okay, it'll give me a bias. So when price is here, I want to go short. Price is here, I want to go long. And you might go, aren't you a Yale student? It's just like, well, you could say that if I do it in the same day. Yeah, you could say I'm being a Yale student, but I'm being what a rat is. It's a rat from down here. He's coming off that daily low, and a rat from here coming off the daily high. And we're just playing in between. So, fellow traders, if you haven't, go ahead, subscribe, click the like, because for some strange reason, I guess YouTube wants to hide me. I guess I don't have enough views like some of those other trading sites. And I'm just curious as to what they're doing that I'm not, or what I'm doing that they're not, to get more views. So maybe you guys can share the videos and maybe get some more views here. Anyway, just remember, stick with your routine. And if your mind isn't right, take a break. Just take a break, maybe a whole day or just an hour. Just walk away, come back fresh, hit the reset button, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.